Okay. All right. So I guess a good place to start is like what little background of your like academic and like career progression. Like take us back to the beginning. Take us back to
Yeah,
like from Bancroft.
yeah. No, that's fine. It's funny actually. Quite a few interviews, even still at my age, like approaching 30, start with this. So it is
Okay,
good to
okay,
kind
okay.
of rehearse it and for people to be able to um, share their progression and where they've come from, etc.
Yeah,
So
yeah, yeah, yeah.
I guess, look, I think at school, as you would know, I quite enjoyed kind of mathematical related subjects. So was pretty decent at maths,
Mm.
and then so that decided to do economics at A level as well because I thought that was quite
Mm-hmm.
interesting and it used maths. But I actually also quite liked essay writing subjects too, and economics seemed like a good
Why didn't you do maths at university?
because I think when I looked at it when I was doing my A levels, I think doing maths at university seemed one a bit boring because it's very academic.
Yeah,
It's all
yeah, yeah.
quite
Very
theoretical.
theoretical. Yeah, yeah, yeah.
Yeah, but also I'm not sure. I don't think I was that good that I would be like so good at maths or as able to do maths as
Yeah.
I was able to do economics.
Yeah, 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 yeah.
So that led me down the middle path, which was economics, and
Okay,
economics is
okay.
clearly one of the most studied degrees. And
Yeah,
I
yeah.
think people, and we can discuss this further, people naturally think if you study economics, then it sets you up well for a career in finance. And that
Yeah,
was something which looked relatively attractive to me. So that's kind of
yeah.
how the interplay worked between wanting to study economics with a view to potentially going in finance, but it's
Yeah,
also
yeah.
suited my skills and my strong
Yeah.
what I was strong at school. So that
Yeah.
worked quite naturally. So after school, did economics, maths, and a couple of other A levels, and then did economics at university.
Yeah.
Now
University of?
it's of Cambridge.
Yeah.
um, it's funny when you get to university, and I think everybody finds this out. It's a lot more mathematical than you think and what you study at A level.
Mm.
So funnily enough, I'd actually say when I studied economics, I was probably slightly better at some of the more not just essay writing, but problem solving parts of economics which required less maths. So I found the maths quite
Mm-hmm.
difficult.
Mm-hmm.
Um,
Like the microeconomics has got quite a bit of maths in it and stuff, no?
yeah, so I was always much better at macro than micro, for
Yeah, yeah, yeah,
example.
yeah, yeah. Okay.
And the parts of micro that I was good at were the ones which were more maybe intuitive and less mathematically
Yeah, 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 yeah,
derived
yeah.
and based.
Okay.
And I wasn't very good at metrics at all,
Okay.
which is funny. But yes, I studied economics, and that's I guess it's almost separate to my degree. I started to learn more about finance through finance societies and things at university.
Okay, okay, okay,
And
okay.
a question that people ask me a lot, and I think is relevant, is did your degree help you with your career? And
Yeah.
the honest answer is there is. I found even studying economics that there was extremely little overlap.
Yeah, 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 yeah.
Um, so I don't think it's that critical. You understand some things which are helpful, like the macroeconomy, interest
Yeah.
rates, economic cycles, but
Yeah.
really there was no cutting edge from studying economics to get into
What what
finance.
what made you like even go into those finance societies and stuff like this, by the way?
It was really one of those things where I knew my end end game goal was maybe to work in finance, but
Yeah.
really I was more just swept away by what other I saw my peers doing.
Okay, okay,
So
okay. So they were going
people
to finance
in these
societies and you were like, let me go along.
societies,
Yeah.
yeah, people applying for programs, etc. So your net again, it's a very good example of the network being really important and the people that
Yeah, yeah,
you
yeah.
study with, etc., to help you learn about opportunities.
Yeah, 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 yeah. Okay, okay, interesting. Okay, and then so like a big thing for you was getting that spring week, no?
Yeah, 100%. So I probably applied for a spring week for all of the big banks. So let's say
Yeah,
like maybe 10 applications.
yeah.
And I only received one offer. I think I only even received one opportunity to interview. So
Are you serious?
it's incredibly difficult, clearly.
Okay, that's
But
interesting.
yeah,
Okay, so you got the offer at Citibank, obviously, and
yeah,
we'll go on to, you know, like the incredible like I think the story of we'll get there, but like the no interviews and stuff like that, I think it's crazy. Like since like
yeah,
graduating things like that. But like so I like in my mind, you're the kind of person who'd apply for 10 of, like, I never knew that, which is crazy. But like, you're the kind of person
Mm,
who you'd apply for 10 and you'd get a hit rate of maybe like 50% interviews and then it might go down. But what what do you think they're looking for if someone like you, who did incredibly
mm.
well at school with A levels, who's doing economics at Cambridge, what are they really looking for in someone for them to interview?
Yeah, it's a
Because it's
good
clearly
question.
not
I
just the
think
academics.
it's definitely not just the academics, and I think look, even at those early ages, so when you're 18 or whatever, you have to apply with a cover letter and a CV. And I think I
Mm,
saw from some of my peers that they had a lot more work experience than me, and some of them had
mm,
actually even worked in banks. And that's not
mm,
necessarily through, oh, they were privileged and they had
mm,
access to those opportunities. There are programs even for A level students and the like, which people, if you just have to be really switched on to and proactive about. So I think just that
mm,
small difference in having that some names on your CV already. I had some
mm,
work experience, but it was very little and less relevant. Um,
mm.
I think that probably differentiated them.
And I think as well, like with the cover letter and things, I think it is because I think as you've got older and like I mean you've both like looked at we've been on the other side now and like recruited people and things. You can tell when you read a cover letter whether it's genuine or it's just something someone's just like
That's
knocked
very
off.
true. Or if it's yeah, because you can
Like I remember
exactly
like my
it's
personal
true.
statement
Yeah,
and stuff for university. Like it was that thing of say you've read a book, talk about a couple of topics in a book, and then do you know what I mean? Whereas like if you
yeah,
really
definitely.
know your stuff, you don't need to blag
It
in the cover
flows
letter. You
naturally. Yeah,
it flows
yeah,
exactly. Okay, that's
yeah.
interesting. And then okay, so you get the spring week, you then do well in that to get the summer internship after the second year, and then after that you go straight into the graduate program.
Yeah, that's basically how it works. I was lucky, kind of flowed through all of that into a graduate offer.
Okay, amazing. And then, like for instance, for myself, like when I thought about it at university, like similar was to get into finance things, but like I really had no idea. Like I knew like investment banking, there was M&A, there was ECM, DCM, ECM, DCM. I didn't really know what on earth they were. M&A
Hmm.
because I knew it was mergers and acquisitions. I knew it was when one company buys another. So I would just read about a deal. I'd read about a deal before an interview and just talk about that. But like, how did you get into DCM? Was that like we talked about this? Like people still ask you that, but like, was it a conscious choice or no? How did it happen?
Yeah, so it started off as a sort of unconscious choice in that probably the reason I got my spring week at City was because I applied to the DCM and ECM divisions, which were separate
Mm,
to M&A. So I think
mm,
most
mm,
people
mm, mm.
probably apply for M&A, but at City they had them in separate um,
Right.
application forms. So I was like, oh, maybe this is a good way for me to diversify and I might stand a better chance of getting in, which actually
Mm,
proved to be the case, I think.
mm,
So that's kind of how I initially landed there. Now, my end goal was that I didn't think I wanted to work in DCM or ECM, but it was a good way to get my foot into the door. But
mm.
look, I guess I was very lucky in that literally on my spring week and thereafter on my summer internship, I was placed onto a desk which I really liked, which was a
Mm,
slightly more technical side of the DCM desks. As a desk called leverage finance, so it's still dealing with private equity firms buying out other
mm,
companies and just
mm.
helping them to find debt packages to support those acquisitions. So there's quite a lot of work with M&A teams, etc. So I was partially lucky in that I was initially placed on a desk which I ended up really liking, but then I made
Yeah.
a conscious decision to make sure that I could return to that desk and end up there.
Okay. Interesting. Okay, so that's perfect. So like, within DCM, so you're saying you're working with private equity teams, helping them with debt package and stuff. Could you maybe just give us like a I don't know. I'll come on to like the supermarket industry in a second because like this interview is related to the Tesco case. But could you maybe just give us an example of like, okay, so a PE company wants to buy out a firm, like how would you guys be involved? They'd ring
Sure. So
Citibank, or you would hear about this deal, and how would it work?
yeah, so at a very high level, when a company is being sold, there's normally something called an auction process.
Mm,
So there are essentially just multiple rounds of bidding for a business to be bought,
mm,
and multiple buyers, whether they're private equity buyers or non-private equity buyers, will
mm,
be involved in that process, and they will put bids in at subsequent
mm,
phases for a particular business. And
yeah,
during that auction phase, banks will be lined up with the private equity buyers, and that's just relationship. So
Yeah.
the big private equity funds might call Citi or Goldman Sachs and say, hey, we're looking at this asset. We'd like you to help us. And the banks can help in a couple of ways. So they can help provide mergers and acquisition advice. So they can help them with the valuation and help the private equity fund figure out how much they should be paying for an asset.
Yep.
And then they can also help on what's called the financing, which is we would like you to help us secure a debt package in our attempts to buy this business. And debt is very important for private equity because they look to, of course, put as much debt generally on businesses as they can, so which enables them to lever up their equity return. And that's how private equity is able to generate a substantial return in many cases. So that's how the kind of process works. And then you get towards, you have these various phases of bids essentially in an auction phase, and ultimately the business is sold typically to whoever is the highest bidder.
Okay.
And that can take anything just from, that could take a month, that could take 3-4 months. So it can be pretty long.
So those two things of helping them work out the valuation, is that what the M&A team does? And then you guys help with the debt packaging?
That's right. Yeah. So we'll work in conjunction with the M&A team because understanding valuation is also important for understanding how much debt you think the company can sustainably raise. So yeah, the two teams will work together, but they've got different goals. One is purely on valuation, one is on debt financing.
Okay. And then within debt financing, what are like, some listeners I'm sure would already know, but like for those who don't, like, to be honest, I'm not even that like clued up on it, but like, what are the different types of like debt financing that you're talking about?
Yeah, so it can get quite complicated quickly, but at a high level, there are two products which we will use to help private equity clients buy companies. One is bonds, and the other is loans. So they're both forms of borrowing. And then debt, unlike equity, can have various layers, if you like, and various different rankings. So you can have something which is called secured debt. You can have unsecured debt. And it can go all the way down the capital structure. So you can basically put as much debt on a business, and then you'll price it in different ways depending on how secure and how well covered you think that debt is by the business's earnings. Okay,
interesting. And then within your like team, you've got a structure of how does it go? Analyst, associate, VP, all the way up. Like, how is that responsibility? How is that responsibility shared? Like, how has that changed for you as you've gone up? Like, first as a graduate, and then as you've gone up to now director. Like, how does that, what you're doing in a deal change?
Yes, that's a good question. I'd say in the first 4 or 5 years, so when you're an analyst and associate, it's quite analytical in that you do a lot of work on pitch books, you do a lot of work on internal and external memos, which are essentially analyzing companies and their credit worthiness and why you think that the bank should be lending a certain amount of money to them and why you think that's been justified by maybe precedents that you've seen in the market before. So you do a lot of work with a lot of data and you try and put together essentially what you call it. It's really a credit story to validate the fundamentals of the business, and so you can make your case.
You have to really dig into like the fundamentals of business and look out, 5-10 years and be like, this is why I think you should be able to, fund this because this is a stable business and we are generating sustainable cash flow.
Exactly. Exactly. Yeah.
So that's the first 4 or 5 years, and then after that.
And then after that, I guess you move probably into a kind of middle management role where you're more responsible for reviewing work, which is done by junior folks. But then you're also maybe going to do more presenting. So you might speak with CFOs, treasurers, and do update calls with them and just build a closer relationship with people at that kind of C-suite level, but also private equity clients, so that you can be the kind of port of call for when they want to look at a new deal and they'll reach out to you. That probably takes place more when you're a director than a VP, but it begins to transition the role from more being a purely analytical one to more of a people-facing one.
More of a relationship one.
Yeah, essentially.
Okay, interesting. Okay, so if we can talk a little bit about the supermarket industry, Oops, and I know Morrisons and Asda, they were recently bought out by private equity. Citibank weren't involved in the Morrisons one, but like maybe if you could just talk about what is the rationale? Why are Morrisons being bought out? Why does the PE company want to buy them out? And like for that analyst, for like people at university who hopefully are going to be graduates and doing the analytical work, like what is it that they're maybe looking for in a supermarket?
Yeah. So I think the most important thing to start with is when you're looking at an investment from a credit perspective as opposed to equity, in growth is really not the most important thing. Equity investors are always looking for growth. In
Yeah.
credit, all you're ever going to be repaid is the amount of money that you lend, and then you receive a coupon or an interest payment on a regular basis. So what you're actually looking for is what we call downside protection. So you want to make sure that the business is defensive, it's not cyclical, etc. And I think people had taken a view that supermarkets are a very defensive business. You know, even if we go into a recession or what have you, people are still going to need to shop at the supermarket. People may switch away from going out to restaurants and buy more kind of homemade ready meals. So it's viewed as something which is somewhat counter-cyclical, very stable. The UK supermarket industry has been borderline oligopolistic in that you've got Tesco, Sainsbury's, Asda, and Morrisons as the big four. Now there have been threats from Aldi and Lidl and discount retailers like them.
This is something that's what we talk about in the case is that it's an oligopolistic market, but like the threat is Aldi and Lidl and these guys. But
exactly. So that's what we think about. But historically, Aldi and Lidl have not been around for 2-3 years. They've been around for a while actually. And there have been periods where they may have taken some market share, but it's still been a very stable industry, both in terms of profitability and just visibility over the cash flows, which you should be able to generate in the future. So that's why people see it as a business, which is very attractive to put quite a lot of debt onto, because they think that the business will be able to sustain those debt and pay interest on that debt. So that's one of the reasons people like it. And then I guess, sorry, just very quickly, a more specific reason with some of these supermarkets is that they actually own a lot of their real estate. So people take comfort from the fact that if all else goes wrong, well, actually, I've got real estate which is worth a lot of money, which I could sell and then use to repay my debt. So the security package, if you like, is viewed as attractive with supermarkets.
It's what they talk about, the net asset value, you know, like their asset base is still, because they've got the properties and stuff like that. But then also, like private equity swoops in a lot of the time when share prices are devalued, no? So then then it costs them less to actually acquire the businesses. So like, I think you saw 100%. Morrisons like struggling in the share price. It then becomes more attractive for private equity to swoop in. I guess the thing though is, with you're saying with people who like invest in debt and stuff, obviously they'll get back their coupon plus like yearly, quarterly interest payments and things. But for the private equity guys who are swooping in, that's not the case. No, they're buying for a price.
Correct. So they're looking for the equity upside. They want to grow the business. They want it to be more profitable, etc. So those are kind of conflicting things that we need to look at. In that they want something where they could put as much debt on it as possible, which implies that it needs to be stable. But actually, they want to grow the business so that when they sell it 5 years down the line, they make a lot of money on their equity investment. So one of the ways that private equity does that and has attracted quite a lot of press attention actually is that they're very good at taking costs out of businesses. And often you'll see businesses run with what people think are essentially fat and, you know, either too many staff or inefficient supply chains, etc. And private equity is supposed to be kind of masters and experts, and they use experts and ex-CEOs, etc., to help figure out if they think, actually, we don't need to grow this business. We can just take all the costs out and we're going to have a lot more profit in this business. That will actually also help with the valuation. So when we sell it in a few years' time, even if the EBITDA, say, is exactly the same, we might have improved the multiple on the business, and that's how we're going to generate our return.
Interesting, because it's funny because this like streamlining a process. You actually see that Tesco, even though they're obviously not private equity owned, like they exited their Asia business. They're exiting like several like Central European business because it's this thing of such massive companies, like supermarket companies. Like how much more can they grow? Like how much more food do we need to put in our fridge in our kitchen? It's a case of how do we just make this the most like efficient business that it can be?
Yeah, exactly. Yeah, and they'll all make arguments that they think they can capture market share from the other ones, etc., etc. So it's a matter of trying to figure out how credible you think that is.
Okay, clear. Okay, so as we said, so like with these, what the investment bank will do, they'll work with like the private equity company to structure like debt packages so they can buy Morrisons. Okay, that's clear. Okay, that's important. moving away from like the whole supermarket side of things, I actually just want to talk to you about like your the role and what you enjoy and things like that. Because like I've seen you, like we've been out for dinner and things. Like occasionally you've had to jump on your phone and stuff. I'm like, gosh, like he's
Yeah.
working so hard. But like, what? Yeah, how do you think about the role? Like, obviously, that is part and parcel of the role, I guess, which isn't common for a lot of people. But I think it's important for like graduates to know that.
Yeah.
But then, yeah, what's your overall feeling?
Yeah. So I guess I like it because I just find it challenging, but in a good way, in that it pushes me sometimes intellectually, but also
Mm,
just your ability to work with lots of different people who have
mm,
very different characters and things. So the people side of it and the intellectual side of it marry up quite well. And I always find it challenging. And there
mm,
haven't been moments where I felt, oh, this is getting really boring now. There's always a new
mm,
day with
mm,
a new challenge. I know that's a bit cliche, but it's kind of true. So
mm,
I
mm,
find it
mm, mm.
challenging, which is cool. I'd say I'm probably naturally a little bit competitive, and there is definitely a
Mm, mm,
competitive angle to this in that you're competing against a lot of different banks and
mm,
people who think they're high achievers, and so you're all kind of
mm.
competing to win the same business, and that can be
Yeah.
quite exciting at times.
Okay.
So yeah, the flip side of that is the hours can be unpredictable. They can be long.
Yeah.
There may be weekend work. So
What
I
is your
think that's up.
what is your
Mhm.
boss when you're at dinner with me and you're on your phone, you're like, I've got a bit of work. What is the kind of stuff that's being asked? Is it like a client wants to know X, Y, Z?
Yeah, it might be like, oh, you told me that they could raise this amount of debt at this pricing, and this is ultimately a job which is quite dependent on the market as well. So
Yeah.
if the Fed hikes interest rates by 50 basis points, the next
Mm.
week the pricing that I think is the right pricing might be very different. So often
Right,
people are
right.
just asking me, so can I get your updated view? The market, rallied a lot today. Are you going to think? Do you think that we could do better than what we pitched them yesterday? So it's just
Okay,
very
okay.
much a kind of live info job where you need to constantly update things and show people ideas, and that comes back to the competitive element. All banks are pitching all the time, so you need to
Mm.
be doing the same, and often that means doing work again and just updating it and refreshing it
Yeah.
for where the market is at that moment in time.
Okay. Okay, okay, clear. So you have to have obviously like you're incredibly clued up with like what's going on in the world and stuff, but that is essential for this role.
Yeah, so having an interest in the markets generally, I think, is very important. And I read the FT in my spare time, and I
Mm.
enjoy it. And if that's something that people will enjoy, then I think that it's a career that you might like as well.
Yeah. Okay. Okay, clear. Um, I don't really want to go into this much because people can just Google it, but you, I mean, you get for the weekend work and for the long hours and stuff like that, you get compensated well. But did the compensation and stuff surprise you, like from when you joined and like what you heard about investment banking, or was it fairly like normal because you'd read about it and stuff already?
Yeah, so I guess there's no way of getting around it. You get paid well and compensated
Yeah.
well, and actually, if you work it out on an hourly basis when you're junior, it's actually not hugely impressive. But look, it's good compensation.
Yeah,
But
yeah.
it was very much something that I guess one of the good sides of investment banking is it's quite transparent what you're going to be paid. So it didn't come
Mm-hmm.
as a surprise, or I wasn't like, oh wow, I'm blown away by this. I was like
Yeah, yeah,
pleased,
yeah.
but it was in line with expectations.
Okay, okay, clear. Um, Now, I want to go into some of the more like softer skill kind of things is, and just before we
Yeah,
wrap up, is
sure.
like, what kind of
Yeah.
like books have you read like over the last 10 years or so that you wish that you told a younger Upen to read earlier that have helped you in life and in career?
Yes, I guess a book that I read recently, and I think it is an extremely popular book that a lot of people have read, but it would have been good if I read it 10 years ago, was Atomic Habits.
Okay.
So
Who's that by again?
I think it's James Clear, I think is his name.
Okay. Okay.
It's something which I try to apply to my life naturally anyway, but I think I'm quite a big believer in the fact that your habits are more important than your goals, and habits
Mm-hmm.
compound over years, etc., etc. So it
Mm-hmm.
just places importance on having good habits, and then everything else will hopefully take care of itself. So that was a
Mm.
really good book I enjoyed. I actually haven't read any Matthew Said books, but he writes in the newspaper pretty much every week, and I know he's got a
Mm.
few books, and I just find him an incredibly logical
Have you
and
not read
thoughtful.
any of his books?
I've not read like Black Box Thinking or anything, but I know like the
Okay.
philosophy of quite a few of his
Yeah,
ideas
yeah, yeah,
and
yeah,
like
yeah,
the crux of what he's trying to get at. And yeah, I enjoy reading his commentary, and he often takes a kind of contrarian point of view, but it's done in such
yeah,
a logical way that you end up agreeing with him.
yeah, 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 yeah,
Um,
yeah.
so
No, I
those
can
are
definitely, echo that one. Matthew Said, I absolutely love. Um, Atomic Habits, I haven't actually read, but I've heard of it. I'll give that a look. Um, any courses or like personal skills or other skills you think are really important to develop that have helped you, or again, like you would tell yourself when you were younger to invest in?
yeah, I guess maybe this one is a bit specific to me, but I can't emphasize the importance of one having good communication skills, and maybe less than just good communication, but good people skills. So
Mm,
being able to adapt to different characters and different environments is going to be really
mm,
important in a career, and that's something that isn't emphasized so much at school or
mm,
university.
mm.
Um, and
But how
probably
did you develop
also
that? Because I mean, I remember at school and stuff, you were like people are different naturally, and you're maybe more the
yeah,
shyer type. But like now, like in your job, you have to communicate with so many different groups of people. Like, how
exactly, yeah.
did you learn that through experience or what?
So I learned it through my job, I would say, but it would have been helpful if I'd have done more stuff at school, like even if it
Okay.
was like, being involved in more drama and plays
Yeah,
and
yeah, yeah, yeah,
doing
yeah.
stuff like that where you have to speak up more. That would have been helpful.
Yeah.
And I think an important one, not just for my job, but probably most jobs, is getting used to public speaking. And that can be speaking in front of 10 people for the first time can be really daunting. And if you've never
Yeah,
done
yeah,
it
yeah.
before, even more so. So I think that's a good thing to just, practice. And if you have opportunities, try and take them and get used to doing that. It's something that I
Yeah, yeah,
always,
yeah.
like you said, I'd probably shy away from at school. But I
Mm.
wish I'd done that from an earlier age. It would have made the start of my career probably a bit easier.
I mean, you used to be pretty good at bogeys. That's pretty public speaking.
Bit of an exception there. And then a kind of hard skill, which you did mention, which so I was so bad at Microsoft Excel when I started
Were you?
when I did my summer internship. I was really lucky. Someone basically just took me aside and taught me, but I could easily have been like people wouldn't have been bothered with me because they're like, this guy is useless. So just
Really?
learning some
Yeah,
like basic skills or something like
because I
that
mean
before you do an
that kind of
internship
stuff you
is
never
helpful.
that stuff you never learn. Obviously, never at school,
You don't
and
really, yeah,
at
yeah, you
university you
don't.
don't really learn that either. So yeah, that's a good point. Where would you
Yeah,
learn
and
that?
there are courses for it, I think.
There's so many
Yeah.
resources now. I mean, you go on
Mm.
YouTube. There's so many brilliant
Even
videos for
YouTube,
it.
yeah. Yeah. Yeah.
Okay, final question because this has been brilliant, mate. Is I found this interesting. I think I've asked you this maybe last week, a couple of weeks ago, but it'll be interesting to hear if you've got updated thoughts. But like, if not investment banking and DCM, what other careers would you maybe have pursued?
Yes, I considered at some point looking at consulting because it's quite
Okay.
interesting, and it's probably more of a problem solving type career than banking in many ways. Banking can be a bit
Mm,
formulaic, and strategy
mm,
consulting looked interesting from that
mm.
perspective. And then the other one was maybe directly straight into asset management.
Okay.
So that's where obviously you're actually investing people's money in things, and
Yeah, yeah,
that
yeah.
just looked quite interesting because you need to be in touch with the markets clearly as well. So
Yeah,
that
yeah,
was
yeah,
maybe the
yeah.
other one I'd have considered.
Okay. Actually, a final question actually is if we talked about at the beginning of like there's that perception, myself as well, because I did economics and maths was economics, maths, these are degrees that get you into finance. What would you advise people if they want to get into finance stuff, like which degrees they should be doing?
I mean, actually, probably the number one degree, and it's some people would say it's a pretty boring degree, but I think accounting is a
100%.
very
I was hoping you were going to say that
important
because
degree.
I would tell people accounting and finance or
Yeah,
accounting and economics, where I think it's good to get that economics aspect. But if you're going to do finance, I think finance is the one that you should be learning. Those are the kind of like
yeah, and
mathematical stuff.
finance is normally like a master's, but accounting
Yeah,
and
yeah, yeah,
finance is an undergrad degree, so I definitely
yeah.
say that one.
Okay, okay, perfect. Uh, Mate, this has been absolutely brilliant, and I think we've stuck to about half an hour. So I appreciate your
Mhm.
time, mate, and I'm sure this will help a lot of people. So really valuable. Thanks, mate.
All right, well, I hope so. All right, thanks, Nigel.